Hello and welcome to the paid weekly recap for the week ending April 10th, 2026. I am Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I also urge you to read the characteristics and risks of standardized options available at the highlighted link, and if you need more time with the disclosures, please go ahead and pause the video here. So first things first, the 10-year yield. The market in the 10-year yield has been falling a little bit here as we prepared for potential for negotiation with Iran. Now, on Monday and Tuesday, the threats of escalation were present. Tuesday evening, the announcement came that there would be a temporary ceasefire to negotiate. That allowed for the 10-year yield to fall as confidence increased that inflation might be tempered, oil prices may come back down, and something could come through that would de-escalate the situation further. Over the weekend, we had J.D. Vance out in Iran. A deal was not made, no surprises there. The ceasefire was set for 2 weeks. So to have a deal within 4 or 5 days would seem generally unlikely, but also possible. Now, at the end of the day, we will see how things react in the marketplace on Monday, but the initial reaction to the ceasefire was certainly quite bullish. The S&P 500, which had been getting into bear territory, quickly started to recover leading up to that escalating threat. The market expected the threat of escalation to lead to de-escalation, and they were right. The ceasefire caused a spike up in the market back into the range of January and February. The move since the beginning of the increased escalation in the Middle East has been unwound. Everything that happened in March, gone. We're right back to the range where we were in February. Where the market goes from here is anybody's guess, but it seems like right now this market is preparing for a bull case, a deal to be struck. It may take another week, it may take 2. We may see a delay, a continuation of the ceasefire while we continue to look to make progress. There's always the risk that ceasefire just comes to an end and things get worse again. But for now, the market seems to be expecting the former, that this period of peace can lead to meaningful progress. Tech is certainly more bullish in the short term. We are trading at the highs of the February range rather than the lows. Sideways action throughout the last 6 months, outside of the last 2 weeks of March, illustrated that there really wasn't that much long positioning in tech that needed to be unwound. Much of the move in March seemed to be a liquidation event, and since tech had already been being rotated out of as people looked for opportunities in other sectors, there wasn't as much long positioning to reduce. And as a result, we're now trading at the highs of that February range and looking much more bullish as people consider and investors consider more risky assets and going back into that heavy growth sector of tech. Small caps had been looking a little bit more bullish in December, January. February sideways, more of a pullback as there had been some long positioning that was relatively fresh in this market. So that position reduction hit that more. While it didn't get far below the 200-day moving average and really only for a few hours at that, the market looks a little bit less bullish than tech in the short term when compared to the February range, but overall trading near the highs as we trade back in the middle of the range that was being set prior to the fall at the beginning of the escalation in the Middle East. The VIX is pricing in very little risk here relative to what it was trading at before, frankly. Outside of this, if we didn't have the Middle East situation, we do still have earnings, so there should be a little bit of a premium built into the VIX. 17 might be a natural landing point, and we're sitting at 19. Things look generally bullish here for the market. The fear is effectively gone, very limited. If things do escalate, the VIX could spike 35, 40, 50, and that's just not being priced into the market. So the question is the market right to know or to expect that all of this will work out in the end? With a low VIX, it creates good opportunity for the long call positions. And for paid on Friday, we added TJX, broke out of the rectangle, new highs on Thursday. Looks like generally bullish momentum. Now, on Friday, we did have retail stocks on the whole a little bit weaker. TJX pulled back, tested the highs of that previous range, tested the breakout range, holding near it. A little bit questionable, but with the VIX as low as it is and implied volatility falling, there's some really good leverage here. A retest of the highs would likely yield a 50% return or more in these options. So the risk justified the reward justifies the risk here. Excuse me. When you get TJX in a situation like this, it looks like the opportunity is there. Investors are looking for some long allocation here. And it doesn't take a big move to generate a big return when looking at those May 165 calls. So we like the setup. It looks like something that would be likely to be executed in the following week, in the coming week. Generally, I'm not sure that I would want to hold many positions into the deadline of the ceasefire because if things do escalate again, the market could liquidate. The VIX would spike and that would help offset some loss from the directional move. But overall, I don't want to have large directional risk with the market trading so close to the highs and tail risk to the downside so present. Now, if negotiations do start to show signs of sticking and progress seems to be being made, that could change the story. So I've got to watch the headlines, got to watch the fundamental shifts. And for updates on that, please be sure to join us in the live trading room. Vlad and I will talk through market conditions, what the AI is kicking out, what technicals are looking like, looking for opportunities within this market, given current market conditions. So do please join us 9:15 till 10:15, 10:30 Eastern time for the morning bell, 3 to 4 for the closing bell. We're always happy to answer any questions you have about any stock, and in particular, of course, the paid trades. And if you have questions outside of our normal trading room hours, please reach out via email. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, everyone, and looking forward to another exciting week with both fundamental updates from the Middle East as well as earnings.